LiteFinance, the world of financial freedom.
Hello, it's Monday, February 27th, and it is time to start the market forecast. So this week we have a couple of very important macro data publications which most likely will push the prices, although this Friday is already the first Friday of the new month, but the NFPs will be published next week. So let's begin. Today nothing much happens as usual, so we move on to Tuesday, where Swiss and Canadian GDP figures will be published and CB consumer confidence from the US. On Wednesday, a round of PMIs from the UK, Eurozone, Switzerland and the US. On Thursday, which I think will be the most important day of the week, we will have a CPI inflation data from the Eurozone, and late in the evening also the same data from Japan. Lastly, on a Friday, another round of PMIs from major economies, but without payrolls from the US, as I said in the beginning. Okay, in January, both the PCE index and the Powell Price Index, the cost of service excluding housing and energy, increased. According to the Fed chairman, the latter may be the most important one. As a result, the derivatives market raised the expected federal funds rate ceiling to 5.39%, the highest level since the beginning of the monetary restriction cycle. Derivatives signal that the borrowing cost will soar to the above-mentioned level by August. However, in early February, experts predicted that the central bank would end monetary tightening in March. It seems that it was easier for the market to survive the sales of 2022 than the unexpected hit in the US economy in the middle of the winter. So the transition from the January S&P 500 rally to the fall of the stock index cost Euro-USD dearly. The euro has already fallen by 4.5% against the US dollar from the February high levels, and this is not the limit, nor the market's forecast Euro-USD to fall to 103 on the background of a higher federal funds ceiling. In a joint study, economists from New York and Columbia universities and analysts from JP Morgan and Deutsche Bank noted that the rate ceiling would have to be raised to 6.5%. Thus, the economy will not be able to avoid a mild recession. According to Bloomberg experts, neither the recovery of the Chinese economy nor the reluctance of Eurozone core inflation to decline from a historical high of 5.3 does not help the euro. Bloomberg also forecasts a slowdown in consumer prices from 8.6 to 8.2 in February. China's GDP growth will depend on the willingness of its population to spend the colossal sums of money that they have accumulated during the pandemic. Not so long ago, Americans and Europeans spent their savings very actively. However, Asia is a special case. The continent's savings rate rose to a record high of 33% in 2022. The Eurozone's ability and the rapid recovery of the Chinese economy may contribute to the acceleration of US inflation. So if the Fed raises the federal funds rate to 6.5%, the greenback will continue to strengthen. In my opinion, the USD will dominate Forex until the release of the February US jobs report. As long as Euro-USD is below 105.85, continue short-term sales towards 104.85 and 103.25. And so, that will be all from my side for today. Thank you for watching, and till next time.